With the real estate market across the U.S. heating up to historically unprecedented levels, you might be wondering, which market should we look at to see if the trends are changing direction or speeding up even more? In today's video, we're going to identify those critical markets to watch and share with you the benefits of our research. Let's get into it. Today's video is a product of some research we're doing for our series on when is the housing market going to crash, which is the million-dollar question this year. And depending on your market, that could literally be a million-dollar question. If you haven't seen part 1 of that series yet, make sure to check it out on this channel before the release of the upcoming part 2, where we'll focus on housing supply and how that is affecting prices and where it looks like it's heading in the future. I'll leave a link to it down below in the description sections for this video. In the mainstream media, and even here on many other YouTube channels, we often see people citing national housing statistics in their stories, like prices and sales numbers. But these don't always capture the important details that are happening below the surface. On this channel, we dig into the data for ourselves to provide a deeper analysis. As both a professional economist and a licensed real estate agent in the state of California, I can give you a unique perspective that you can't find on other channels. There's a saying in the real estate industry that all real estate is local. There really is no national housing market. There's just too much variation across geographies. Now, you can aggregate the regional statistics to create national numbers, but they can be misleading. You might see high prices and high supply in national figures and conclude that we're in a bubble, but that might be misleading. You could have a situation where the markets with high prices had low supply and the markets with low prices had high supply. But that's not going to show in those aggregate national numbers. You have to go below the surface to see what's really going on. And it's for this reason that we're doing a regional analysis for our series on when is the housing market going to crash, and identifying what are the top markets that are driving home prices. If we can get a sense of the direction of these markets that are driving the national numbers, then we can say something a bit more meaningful about where the housing market overall is headed in the future, particularly if it is headed in the wrong direction. It's kind of like the idea of the canary in the coal mine, where coal miners would take a canary in a bird cage into the tunnels with them as they were mining as a warning signal if there was anything dangerous in the air in the tunnel they were working in. If the national housing numbers are going to change direction, we should see it in these markets first. Now let's take a look at these top markets, and then I'll tell you what went into putting together this list, how they're driving the national numbers, and how this will work in our series on when is the housing market going to crash. Here's the list of what we are identifying as the top housing markets to watch. Keep in mind, these are metropolitan areas and not cities. So at the top of the list here we have Los Angeles, California, but that is all of Los Angeles County and not just the city of Los Angeles. You may notice that a lot of these markets are in large metropolitan areas, many of which are in California. This has a lot to do with how we identified these markets. Using data from Redfin, a national real estate brokerage company, we looked at over 400 metropolitan areas and ranked them based on their number of home sales over the last 12 months and compared that with the prior 12 months. And also by the dollar increase in home prices averaged over the last 12 months compared to the prior 12 months. Essentially, we identified the markets that are contributing the most to national home sales and price figures. Here's what that looks like in terms of prices. We combine the 20 market median home prices for all properties into a sales weighted average to get a single measure of prices for this group. You can see here the big surge in activity that began after April 2020. Here it is with the national median home price for existing homes, and the top 20 markets have an average price almost twice as high. And here is the year-over-year growth for the two price measures over the last 2 years. In 2021, the top markets have really broken away from the national numbers. Both are trending higher by historically high rates, but the top 20 markets have noticeably stronger price appreciation. A real estate crash basically means that prices would fall substantially. These top 20 markets have represented almost 25% of all home sales over the last 12 months. So we're going to look at these markets as one of our leading indicators for what happens at the national level. In future videos, we'll do a deep dive on some of these markets individual as sort of a case study. This research is all part of our series to answer the question, when is the housing market going to crash? Thank you for watching, and please give this video a thumbs up to support the channel, and I hope you will consider subscribing if you haven't already. And don't forget to hit that notification bell down below so you'll know right away when our next video comes out. I'll see you then.